What are the liquidation pools? The 80% of time the price is manipulated by high-frequency bots with a lot of capital, and they need liquidity in the market to do that. That's why the bots force the price into the zones where they know there's more liquidity, because they need to close their positions with profit in those zones where there is a lot of liquidity. Those are the zones where the liquidation points and stop loss of all retailers converge. That is, of all the traders who use leverage to get into the market. We've created a mathematical algorithm to calculate these zones, and we call them liquidity pools. This is the Bitcoin charted as a 1 hour time frame chart, and we can see the price moving up and down with wicks or shadows and a lot of volatility, and we can see how it reached a new all-time high price, that is the highest price in the history of BTC at 67K, and after that it was moving in a range for several days, and then it reached a new all-time high at over 69K, and then it started to fall sharply. And it made a correction, so what happened here? In the middle, what is making the price move like this? Why does it have these strong moves with big wicks up and down? Now is when we activate the liquidity pools, and for us, they are like X-rays. And the chart starts to make sense, and it shows us a structure. These colored lines, which are next to each other, are the liquidations pools, that is, the areas where the liquidation points and the stop loss of the retailers converge, that is, the rest of the traders who get into the market with leverage, and you can see they are in different colors. Well, this is a heat map. In the warm red and yellow areas is where all the liquidations point and stop loss converge, so there is more liquidity, and in cold areas there is less liquidity, so we can see how the price, after having reached the maximum of 6-7K, it begins to move in this price range. So what happens? The traders begin to get into the market by opening long and short positions in this area, and while they're redoing it, they're regenerating the stop loss in the liquidation points. Those who have entered, for example, in 61,000 short, are generating liquidations points, liquidity pools, on the upside, up here, and those who have entered in long are generating liquidation points down here at the downside. So this is how the liquidation points are generated into the liquidity pools chart. The liquidity pools calculate mathematically all the liquidation points of those traders who have already entered into the market, and we know where they're going to lose, so we can see in the chart how the price is pushed towards the liquidity pools, and that's what the high-frequency bots do, and the evidence is in front of us in the chart. The price fluctuation and even the candle wicks accurately reach the end of each pool, so the price moves towards the pools as if they were magnets, liquidates the positions, and then it bounces and moves towards the pools, liquidates the positions, and then it bounces. So we can see how this new maximum that the price had reached in 69K, it was just the price which went to sweep the liquidity points. It reached the end of the pool and it bounced strongly down. Then what does the price do? Well, it liquidated the new shorters who had entered in this price range, and after that it liquidated the longs, the new ones that were entering with long positions into the market. That's why it ends up sweeping the pool and the price bounces. Look what happens when the price gets into the pool. When the price is inside the pool, it tends to have more volatility and acceleration. And that's why it has strong and fast movements, and we can see that in the big candles. Or in the wicks, we can see it here. With the wicks we can see it with the candles. They are going strongly to the pool, and when it is inside the pool, we see it in the wicks and in the price bounce. We see it here again. This happens all the time. We can optimize our macro analysis for day trading or swing trading by doing a good read of our 1-hour chart. This is a predictive tool, and with it we can anticipate and buy at low prices and sell at high prices. The liquidity pools provide us with information about prices and sell at high prices. The liquidity pools provide us with information about to take profits, but also allows us something more important: to know where to place our stop loss, because it cannot be placed in the same zone where all the other traders will lose, that is, in the liquidity pools area. That's why all the other traders will lose, that is, in the liquidity pools area. That's why all the other traders will lose, that is, in the liquidity pools area. That's why a 5% or 10% we place small stop loss, improving our risk reward significantly. Let us see now how we can use this information to operate. We are going to set the filters of the pools in a more specific way. For those who are new, I teach how to do that in the next video, and we can analyze this. If I see the price going in an uptrend and I am looking for a long position, what can I do? Well, I can start to place a long position inside the range or inside some little pool that has been creating below. You can use the option you want, both are fine. But in this case, we place the position in the range. We place our stop loss outside the pool. Away from the pool can be 2% or 3%, and we calculate our target. We calculate where to take profit. Where? Well, at the end of the pool. We close our position at the end of the pool when all short positions have been liquidated, so we are going with the bots. High-frequency bots are taking the price to liquidate positions, and we are going in the same direction. High-frequency bots are taking the price to liquidate positions, and we are going in the same direction. We went in favor of the price and in favor of the pools that we had upside. But also we can look for a bounce position at the end of the pools, place in order. It could be not exactly on the wick, but can be at the end of the pool. We place a small stop loss. 2% approximately outside the pool. And we set our short position. This is what we usually do. We trade bounces at the liquidity pools. This is our philosophy, our theory. When the price reaches the end of the pool and bounces, it reaches the end of the pool and bounces. Where are going to be our target? Well, could be a little target, 1% or 2%. Could be a 4%, or if maybe the price goes back to the previous range. Or even our target could be the next pool. We can trade from one pool to another. So, check it out how our risk reward improves significantly for all kind of trades. Day trading and swing trading in este caso. And 14% contra and 2% to stop loss in este caso. If you have 3x or 5x of leverage, the profit ends up being really significant. Let us see now another case. Here on September 1st, we can see how the price is going upward. It liquidates the pools and starts to fall down. These are the typical price drops. When the price falls strongly, it falls a big percentage, and we used to attribute that behavior to any kind of bad news of Bitcoin. But what is really happening is that sell market orders has entered into the market, and the high-frequency bots took advantage of That impulse to finish with all positions, which were coming in long during the prior climb. So, when the price is falling, and the rest of traders are losing, when all positions start to be finished, is just there when we started to get into the market, and we take advantage of those liquidation points, where we know where is going to get each wick. So, in this case, we are going to try to get in at the middle of the pool or below. We gonna mark here and we gonna try to enter in this area, okay, at the middle of the pool or below. In this area we are gonna attempt to place our exterior position, and for example, it touches our first buy entry that we already had placed. And an hour later automatically we have more than 10% profit in just one bounce. With a 3x leverage is 30% and with 5x is 50% profit only with one bounce. What does the price do after that? Okay, let us see. It is going for the new liquidity, which is generated by the shorters who are getting in at this part, while the price is ranging. And what does it do after that? It goes with accuracy. Check it out where the tip of the wick is. It ends up with all long positions, those who have been accumulating in this climb, and during this range, look how they're re-increasing. Look at it on the heat map. The warmth in the pool shows us all liquidity concentration in this area. So, the price bounce we took pro-TIF, and now what do? Well, we go back in. We place an order in a favorable area, as we know, in the middle of the pool or below. That is our strategy. We use it in our community, and I teach it in the course too. So, as I said, we look for a position in the middle of the pool or below. In the middle of the pool or below, each bounce gives us the possibility to take profits doing scalping or day trading or even swing trading. Look here how it ends, catching the bounce, and the price goes directly to a new all-time high, over 6,4K. Therefore, this technique works perfectly for us, and we are always positioned at the top of the wick. This is a really big advantage for us. Look at our stop loss in these cases, with a little percentage of 3%, and if I go back in with a position here, I can have a 2% or 3%, no more than that. And if I'm looking for swing positions, we count with a great advantage, and we have this predictive tool, which is telling us precisely where the price is going to go, how far. When the HF bots go to liquidate. Go back now to the prior example and see what happens. In the middle of all this move, we are now in 1 hour time frame, but what happens with these wicks that are here permanently? What happens with these wicks in every rise and every fall? To know that, we are going to the chart. Here in 5 minutes time frame is where we take more advantage of this tool, because, remember, 80% of the time the market is moved by HF bots, and what do they do while the price is moving? In a range in 1 hour or 5 minutes time frame, they are constantly generating peaks and valleys, and those peaks and valleys make retailers lose. They go and sweep the liquidity pools, sweep the pool, and bounce, sweep the pool and bounce, sweep the pool and bounce. It goes to the end of the pool and bounce, and so on. It goes to the next pool, which is down here and has more liquidity. It goes and sweep the pool and ends up bouncing. So, these are our chances. We can be taking advantages of the market permanently. For example, the way that we analyze intraday in a 1 hour time frame. We can also do it in a 5 minutes time frame. We place an order at a little pool and we go in favor of the pool movement to the end of the pool. For us, this is a 3.7% scalping movement. Approximately. Of course, we do this using leverage so we can take higher profits, really significant. The liquidity pools really work. We re-seeing it. We re-seeing it in the chart. We are seeing the pattern and how the price goes to the pools and ends up bouncing. It goes and sweep the end of the pool and bounce again. Exchanges confirm us this information as well. If we come to the chart and push right-click, we can see all of our indicators of our platform in this case. We gonna activate the liquidations of all the exchanges and we gonna see it down here. In this case, look at this: when the price reaches the end of the pool, the liquidation of shorts are reported. In this case, it sweeps the end of the pool, and the liquidations
In this
of long
case, it
positions
reaches
are
the end of
reported.
the
pool, and again, all the liquidations of short positions are reported. Let us see this specific case to know how much was reported in this position. Once it finished sweeping the pool in this candlestick here, see, look at where the largest volume of liquidity is built, is here in this 5-minute candlestick. Let us zoom in a little to see better. Okay, is in this candle. Here when I am positioned, the candle with the largest volume of liquidity, and down there at the top edge of the indicator it shows us 2.6 million. See here. In this part we can see the volume, in this case, only in this 5-minute candle. $2.6 million were liquidated in total, in all the exchanges, so this confirm our theory that they are zones, where all liquidation points converge. That our mathematical calculations are well done, and the pattern confirms it, and our years of experience working the pools, and also with our strategies. If you want to know more about how the HF bots manipulate the market, and how you can work in the market using the liquidity pools, I invite you to do our trading course where I teach all of this, and also I am gonna teach you 2 specific strategies with the pools, completely back-tested and have high effectiveness. Besides, I invite you to join our Discord community to go through this learning process accompanied, and to meet the rest of students, and also see real testimonials from people who have learned with us and they are profitable. On the other hand, inside Discord you lines know about all the Zoom meetings that we do every week to trade together, consult doubts, and, of course, to know each other.